Hi, good morning, everyone. Welcome to our webinar on mobile money in Asia. My name is Simon Anderson Manjang from the GSMA. I'm the data manager within the mobile money team, and we're also joined by Kavita Taylor, who is one of our data analysts. It's great to have you all here today. We're this webinar will be focusing on Asia, both South Asia and Southeast Asia, and we this is actually our first regional cut, as we call it, of our State of the Industry report, which comes out every year. It came out in March this year. Obviously, last year was a very momentous year for mobile money. There was a lot happening, and also mobile money played a particular role during this difficult year. So we will be taking you through some of what happened, especially in Asia during 2020 in mobile money, the kind of responses that we saw, and also how, not just from providers, but also from regulators, and how the industry was impacted. I should also mention that we have published a blog already on Asia, written by Kavita here. So I think we should be able to share that blog with you in the comments shortly. But with that, I think we can actually dive straight into the presentation. So as I said, our State of the Industry report came out in beginning of the year. Beginning first quarter of the year, so end of that quarter. And the data that goes into the State of the Industry report, including into this regional cut, it's based on 4 different data sets. First, the mobile money deployment tracker, which is essentially our sort of market intelligence portal, where we keep track of all live services globally, to make sure where they are, what services they offer, and also when they close. So that's our sort of ear to the ground. Then we have our global adoption survey, which is our main tool for data collection. And that is based on supply side data that we gather from mobile money providers around the globe. Last year, we had about 120 of these providers answering, which represents around 76% of total value transacted. So it's a very big sample, so yeah, very representative of what's actually happening in the industry. So that is sort of the core piece of the data. And how we then handle it, we fill in all of the gaps through our estimating and forecasting process, which is the third step here. Finally, we also, especially for this presentation this year, actually, we added a lot of data from our consumer survey, which is called the GSMA Intelligence Consumer Survey, where we actually ask demand side questions directly from people on the ground. And getting consumers' view, and especially for when it comes to certain usage, account ownership, and even dual account ownership and these sort of things, it's always best to actually go directly to the consumers. So this is sort of our packaged approach to the data collection. Without further ado, I'll won't take up more time. I'll push on to the next slide, and just to give you a quick overview of what's been happening over the last year in mobile money. These are global figures before we get to Asia, just to kind of give you the scale of what's happening in mobile money and where we are. So it's 1.2 billion registered accounts now. And as you can see in the middle here, about 300 million of these are active on a monthly basis. And it's important here to think about that this is a monthly basis, and we're kind of zoomed in on the monthly usage here. This does not mean that the remainder of accounts are inactive. It means if we look at an active 90-day basis, for example, there are about 470 million accounts. If you look at 6 months, there will be more. Yeah, this is just to give you a bit of scale. $2 billion transacted per day, as you can see up there in the middle as well. But I've been chatting away a lot without giving you any space, Kavita. So I'll hand over to you to take us through some of the Asia slides.
Great, thanks Simon, and thanks for the introduction. So yeah, while we kind of have that focus on the global lens, if we kind of just put Asia into the wider context of the global mobile money industry, currently over a quarter of the world's mobile money services are in Asia. So this actually amounts to 85 services in a total of 21 different markets in the region. So in fact, every 1 in 4 countries has 5 or more services. And you can kind of see this on the map slightly as a large kind of area shaded in a darker blue color. Asia as a region is quite unique in the sense that it's taken a slightly different approach to mobile money. So we have, for example, India. In India, India's central bank has introduced payment banks, which is kind of a different branch to normal banking and caters to lower income groups and smaller businesses. And if we move over to Southeast Asia, we've got Indonesia, which is taking like the more of a fintech approach. So despite Asia's kind of different approach to mobile money, they've been successful in creating a number of kind of competitive mobile money ecosystems. And I think, another important thing to note here is mobile money in the region isn't just reaching the lower income markets. Several like upper middle income markets have also hosted a number of mobile money services. So Thailand and Malaysia, for just 2 examples of this. So yeah, if we move on to the next slide. Obviously, 2020 was a difficult year, bringing a lot of health, social, and economic challenges. Despite this, in 2020, registered accounts in Asia surpassed the 500 million mark, so reaching a new major milestone in the industry. So currently, there are 547 million registered accounts, and this has been a significant 13% growth from 2019 as well. South Asia, if we look at that in isolation, has also kind of reached a mini kind of milestone itself, exceeding 300 million registered accounts. So there are several reasons behind this strong growth that we've seen, particularly in a year like 2020. So one being, in general, there was a change in consumer behavior that we saw. So obviously with the COVID-19 pandemic, consumers were more resistant to handling cash and therefore sought out mobile money as a means of making digital payments. As well as that, regulators also had quite a strong part to play. So regulators implemented a lot more flexible KYC processes and relaxed onboarding requirements. So for people that didn't have sufficient documentation, or in some cases didn't have access to documentation, who previously wouldn't have been able to open an account, this was a lot easier with these more flexible processes. So moving to the next slide. Here we can just see a bit more of a breakdown of where this growth is actually coming from. So if we look at East Asia and Pacific, we can see that it did contribute more heavily than South Asia when we compare the 2 kind of sub-regions. And this growth of addition of 34%, and adding in absolute terms 46 million new accounts, this was largely driven by Southeast Asia. So we saw a lot of growth in markets such as Indonesia, Philippines, and Myanmar as well. South Asia, as you can see, kind of fell slightly behind East Asia and Pacific this year, contributing 11% of all new accounts. And adding in absolute terms 16 million new accounts. But looking at the region as a whole, the whole of Asia, they actually contributed 45% of all new registered accounts in 2020. And as you can see kind of on the donut chart here on the left-hand side, this does almost amount to half of all net additions on a global scale. So it's quite impressive for a region as a whole. So if we move on,
I just wanted to jump in to kind of put it into context as well. Like sub-Saharan Africa amounted to 43% of the net ads. So Asia actually outstripped sub-Saharan Africa this year.
Yeah, no, correct. Moving on to the next slide, just to, as Simon also mentioned earlier, we've kind of had a bit more focus on active accounts this year. So while we've kind of seen the mobile money industry in Asia and globally as well, reaching new major milestones, over the next decade or so, as mobile money penetration rates in mobile money markets, as they increase, we will consequently see registered accounts start to kind of plateau. For this reason, mainly, we have shifted our focus to looking at monthly active accounts. So in Asia alone, there is currently 118 million monthly active accounts. And this kind of gives the region as a whole an activity rate of 22%. So just under a quarter there. Again, as Simon mentioned, this doesn't mean all other accounts are inactive. They could just be active on a less frequent basis, essentially. If we look here at the kind of bar chart on the left-hand side, so what's kind of interesting to see over time is how East Asia and Pacific has kind of grown to catch up to the number of active accounts in South Asia. So historically, you can kind of see South Asia has dominated when it comes to monthly active accounts, purely kind of being that South Asia has been the larger mobile market, essentially. But here in 2020, if we just look at that in isolation, there is almost kind of a 50-50 split in terms of monthly active accounts. So it's just quite interesting to see here that, both kind of regions have different drivers behind the growth, and both are kind of scaling at different paces as well. So if we move to the next slide, this slide kind of just gives you a bit of a good overview of the agent networks in both markets. So in fact, although 2020 brought lots of challenges to the industry, 2020 also saw the highest increase in the number of registered agents in the last 3 years. So there's actually overall in Asia a 10% growth in the number of registered agents from 2019. So part of the reason for this was the fact that mobile money was declared as essential services in many markets in Asia, meaning that agents could still operate and function on a usual basis and still kind of carry out transactions for customers. So for example, in markets such as Sri Lanka, Malaysia, Myanmar, mobile money was all declared as essential, kind of helping to keep networks open and continue to facilitate transactions. So here, if we look at registered agents, we can see that South Asia obviously has a much larger network to support the kind of larger consumer base, almost double of East Asia and Pacific. And I think it's good to kind of compare these two regions directly. Obviously, they're very different when it comes to population density and also consumer behavior as well. But kind of despite the fact that the network is almost twice the size, when we kind of put this into context of adult population, agent activity rate, and the amount that's actually cashed in per day, we don't see kind of a significant contrast between the two regions, making them more comparable in terms of the efficiency and effectiveness of both networks. So you'll also see here we've included unique agents, which is actually a new kind of metric we've introduced. So Simon, I don't know if you wanted to speak more about that.
Yeah, sure. I just wanted to, I mean, I won't go into the whole methodology, but basically this is a new methodology that we've developed this year in order to essentially estimate a truer value of the unique agent outlets, as in physical outlets. And this is because essentially there is a natural double counting going on because we get supply side data. In not just in theory, but in practice, one agent outlet can offer the services of several mobile money providers, and will then report twice to a regulator. These figures will be reported twice to a regulator. So what we've done is that we've developed this new methodology on a sub-regional level to essentially leverage the concentration in the market concentration in the agent networks. So we will look essentially at how many players there are in a country, what is the market share between these players in terms of agents, and then we basically deflate the figures that we have here above. So the 1.41 million in East Asia Pacific becomes 704,000. And in South Asia, you see 2.8 million becomes 1.4 million. So there are different deflators for different markets depending on market structure. As I said, I won't go through all of it. You can find the entire methodology in the State of the Industry report, and so the back pages for those who are interested. But yeah, I think I'll keep it short and sweet without going into too much detail.
Great, thanks. So if we move on to the next slide, which focuses more on how the mobile money industry responded to COVID-19 in terms of regulation measures. So obviously, with all the new challenges, the mobile money industry had to adapt and implement new policies which haven't been used before on a usual basis. So from the list of countries here, these are all kind of mobile money countries in the region, and we have a number of kind of different measures that were taken across the region. So from the chart, it's clear to see that each country kind of took a multi-pronged approach in tackling the challenges onset by COVID-19. From the chart, it's also clear to see that Pakistan and India were kind of stood out as the two markets which implemented more policies to benefit the mobile money services in the market. But across the board, I mean, the most kind of popular and most adopted ones were fee waivers on payments, promoting digital payments, and increasing transaction limits on payments. So, yeah, I mean, we saw a few examples of this in the region. In Bangladesh, for example, transaction limits from mobile financial services increased transaction limits from around, in US dollars terms, $890 to $2,300. And this was for the purchase of essential goods and medicine.
Yeah, let me just hop in again there, Kavita. I think it's worth mentioning, I guess, that these policy responses, the way that they can have a great impact in the short term, similar impact, even fee waivers and increasing transaction and balance limits. But obviously, speaking more from, I guess, the industry's perspective, fee waivers naturally has a very negative impact on revenue generation, which in the long term can sort of jeopardize sustainability. And obviously, profitability and sustainability are tightly linked. That's what makes mobile money work so well. That it is a for-profit service, but that has immense positive externalities, essentially, and sort of ripple effects. So it's just worth, I guess, to keep that in mind, that some of the impact of different responses might have completely different impacts on the provider side, especially when it comes from regulators in, I guess, in a unilateral way. I'm not sure if I don't think you mentioned, but we maybe you were going to mention, we have a paper on. I think 2 blogs actually, and some documentation on this as well. I guess we can share this link in the comment as well, because I think what's interesting is also to look at how Asia responded in comparison to sub-Saharan Africa, which also had a very multifaceted approach and a lot of different things happening. Yeah, leave it at that.
Thanks, Simon. So moving on to kind of focus more on the transactions that have been carried out in the region over the past year. So this kind of just gives you the breakdown in terms of number of transactions and value of transactions as well. So looking at South Asia's breakdown in terms of number of transactions, it's clear to see that airtime top-ups still largely dominates this mix. However, saying that, there has been quite a good achievement over the past year. So last year, this was actually 52%, and so it's dropped for the first time below the 50% mark. So we can kind of tell that it's kind of on the road to reducing that even further. Moving over to East Asia and Pacific, it's clear to see that there's a very kind of different makeup when it comes to a number of transactions. And I think the one that kind of sticks out the most is the fact that almost a quarter of transactions are now merchant payments. In fact, East Asia and Pacific holds the highest share of merchant payments globally. But I mean, what's interesting here is that the average kind of ticket size for a merchant payment is the same in East Asia and Pacific as is for South Asia. So there's clearly a kind of difference in consumer behavior in both regions. And again, this isn't actually driven by large transactions. All merchant payments recorded are below the $5 mark. So there's just a high behavior of high frequency and low ticket transactions going on in the region. Moving to value. So again, it's kind of clear to see that P2P still largely dominates, and there is quite a strong reliance still on P2P in terms of value. But I mean, saying that, I think there's definitely been uptake in more of the ecosystem products. South Asia, for example, is 9% of value is bulk disbursements. And this is kind of almost in line with what we see globally. So both kind of regions have, I guess, their strengths, but this again comes down to the different kind of consumer behavior in the region. If we move on to the next slide, so this kind of isolates transaction values alone, where we've seen tremendous growth over the past year. So there's been a 20% growth from 2019 in terms of transaction values, and transaction values in Asia have actually more than doubled in the past 3 years. So This is going from $108 billion in 2017 to reaching $242 billion in 2020. Again, to put this into more of a global kind of context, a third of the value of all mobile money transactions carried out in Asia. So again, it's as well as accounts, Asia is contributing significantly to all kind of mobile money value globally. Moving on to the next slide. This kind of breaks down even further what we see in terms of transaction value. So these kind of pie charts here on the left-hand side breaks down the transaction value into digital transactions, cash in, cash out transactions, and over-the-counter transactions. Just to note that, so what we've kind of just seen on the previous slides of the pie charts, all kind of products there, all digital products, are encompassed in this kind of blue slice of the pie here. Just to kind of put that into perspective. So here we've got a very positive kind of digital growth story. So from 2019 to 2020, the share of digital transactions increased from 40% to almost half, so 48%. Again, there's been a positive story in terms of reduction in both cash in, cash out, and OTC transactions as well. As Simon mentioned, we've kind of leveraged some insights from the consumer survey this year. So the statistics you see here in the orange and green bars, so the 20 and 17%, these are the share of mobile money customers that withdrew less cash because of COVID-19. So this kind of supports, while this focuses on two markets, it does kind of support what we've seen overall in the region when it comes to this kind of a shift to digital and mobile money users increasingly transacting digitally rather than cash.
And I guess something that I didn't mention before is sort of the sample size for this these consumer surveys. So for Pakistan and Bangladesh, it was 1,000 people each, and weighted on according to sort of across the country, just to I guess give a bit of scale there. So it's not we haven't just asked 20 people.
The sample sizes were quite large, and they were also kind of selected so that it would be representative of the entire kind of adult population. So basically coming from different age groups, genders, demographics, and rural versus urban, etc. So if we move on to the next slide, again, this kind of just gives a more holistic and kind of bird's eye view of everything that's kind of going on in the mobile money system in Asia. So we've kind of got everything that's coming into the mobile money system via digital form and cash in, everything that's circulating, and what's basically leaving in digital and cash. So if you kind of just look at the chart here on the slide, I mean, the most kind of obvious observation is that majority of digital transactions are circulating in the mobile money system. And this is largely led by P2P transfers. So I think what's kind of more interesting to look at here on this chart is the fact that the value of outgoing transactions, so there's more kind of value leaving in digital form than what's leaving the system as cash. And this is a great achievement from what was happening last year. So last year, cash out actually stood at 14%, whilst digital was lower at 12%. So there's been like a great growth and a great switch between cash out and digital. And this has largely been due to P2P off-net payments increasing in terms of value, and also mobile to bank increasing in value. And the mobile to bank payments, this has been mirrored similarly by a growth in bank to mobile payments as well, which is part of the kind of digital in category.
Kavita, I wanted to, I think something you mentioned in the blog on circulation, kind of how many times money circulates before being cashed out. Do you have that figure
no, that's
with
correct.
you?
Yeah, so this is something we touched on in the blog. So yeah, the digital circulation ratio it's another indicator that we use. So this is a measure of the number of times a single unit of currency is transacted before being cashed out. So obviously here we've got currency is US dollars, and this figure stands at 5.1. So what this means essentially is that a single dollar is transacted 5 times before being cashed out. I think what's interesting here is when we compare this to the global figure. So the global figure actually sits at 2.7. So we round that up to 3. So there is a large difference of what we see globally and what we see in Asia. And it's just kind of another point which highlights that Asia is kind of a leader when it comes to digital payments versus kind of the traditional cash in and cash out. So if we move on to the next slide, as mentioned previously, there has been uptake in both mobile to bank and bank to mobile payments. So this slide kind of highlights this data a bit more. The chart here on the right-hand side is basically the breakdown of bank to mobile and mobile to bank across time. So it's clear to see that over the past year, so from 2019, there's been very high absolute and relative growth. So this has been 61% growth over the past year. I guess COVID-19 again has had a part to play in this kind of growth that we've seen. So consumers have obviously been more and more reliant on digital top-up mechanisms versus cashing in for their mobile wallets. So those that kind of have access yet to banks have been able to top up this way. Again, looking at the kind of chart on the right-hand side, there's been a high kind of jump in bank to mobile over the past year. And this has primarily been from markets in the Southeast Asia region. So what we've kind of seen in several markets here is that fee waivers have been introduced for these types of transactions, which kind of accounts for why there's been this kind of growth here that we see.
And I think it's interesting also, we'll see kind of what happens next year, with these, how much of this was not necessarily because of COVID, but how much of a structural break will we see in the data? Is this will we see some sort of permanent change here in either behavior or in preferences? So yeah, I guess it will be, I think 2021 data will be really interesting in order to kind of put 2020 into context.
Yeah, definitely. Moving to the next slide. So we've kind of spoken a lot about how Asia is in this kind of transition to a new kind of digital era. So what we haven't kind of touched upon is the fact that businesses and governments are also supporting the industry's transition to digital. So from the chart here on the left, this kind of shows you the number of unique customer accounts receiving government-to-person payments via mobile money. And you can see from September 2019 till June 2020, there's been a threefold increase in the number of unique customers. And so this is obviously huge growth for just kind of a few months. And I guess this has been over impact of COVID-19 as well, which has again affected this large jump that we see. But again, this hasn't just been government payments, which is kind of leading this digitisation. Similarly, there's been a lot of uptake in like the number of businesses that have started paying workers salaries via mobile money. So again, the statistics here in the green and orange bars are from the consumer survey. And this basically indicates that 14% and 10% in Bangladesh and Pakistan, respectively, these are the share of mobile money users who started getting paid via mobile money because of COVID-19. So again, COVID-19 was kind of a trigger for businesses to kind of shift payment mechanisms. And this has been supported by our global adoption survey data, which shows a large increase of 44% in the number of accounts receiving salaries via mobile money. So moving on to the next slide. What we kind of didn't touch on previously was the fact that international remittances, in terms of both volume and value, still kind of only make up a small slice of the pie, somewhere between 1 to 3% across Asia. So it's one of the ecosystem products where significant opportunity remains. So although the total value of international remittances doubled in 2020, we still see kind of a large gap in terms of the value that's being sent and received via formal channels and what's been sent and received via mobile money. So in the blue arrows here, you can see $18.6 billion is received by markets in Asia via formal channels. In contrast, only $110 million is being received via mobile money. I mean, there's a lot of opportunity here. For example, so one of our most recent GSMA papers on mobile money remittances specifically mentions that the cost to send $200 from a mobile money account to another mobile money account stands at around 3%. In comparison, the cost of a global average remittance price using formal channels is almost double at 6%. So there's a huge kind of cost benefit here when it comes to using mobile money for remittances.
Yeah, and I guess for those who don't want to take our word for it, it was actually a great article in the Financial Times just the other day, just looking at the same issues as well, just how important services like mobile money is to bring down the cost of international remittances and essentially bring down inequalities between I guess the rich and the still developing part of the world. And something which is worth keeping in mind is how important international remittances are for a lot of countries, and you know, often even in total terms outstrips sort of foreign direct investments. And I wanted to add one more thing on this slide, actually. Also, it's worth remembering that when we talk about international remittances in Asia, this would also sort of mean between countries in the sub-regions. So there are a couple of new, or not necessarily new, but strong channels within the region, and it's sort of from Malaysia to Pakistan to Bangladesh. We also have from Singapore to Bangladesh, and kind of between Southeast Asia and South Asia a lot. There's also, there are a few that we're keeping a close eye on what will happen, because there are a lot of flows even within Southeast Asia, sort of from Thailand to some of the neighboring countries. So it's just worth always remembering when we're talking about international remittances, this is not necessarily from Europe and the United States or the Middle East into this part of the world, but it could also be between sort of the economic powerhouses within the region to other countries. Yeah.
Great. Yeah, no, that's a good point, Simon. I think with that, we can move on to the next slide.
The baton to you again.
So yeah, I guess
we'll just... I can't hear you.
You can't. Can you hear me now? Sorry. Don't think I'm on mute. So we've spoken a lot about the...
Hello?
Hello? Okay, I think, yeah, sounds good from on this side, so I'll continue. So while we've seen a kind of growth in accounts and growth in ecosystem transactions as well across the region, there's still a significant gap that persists between mobile money awareness and account ownership. So here we've kind of have three countries, Pakistan, Bangladesh, and India, with the kind of relative proportion of people that are aware of at least one mobile money brand, those that actually own a mobile money account, and those where the account is registered in their own name. So again, this data has been extracted from the consumer survey. So just from looking at these kind of donut charts here, there's a huge kind of gap that exists between awareness and ownership. And I mean, it's important to kind of track the accounts registered in your own name year on year, as we often find from these surveys that it's the kind of head of families, which is often men in the Southeast Asia region and South Asia. And in some cases, they register on behalf of like spouse, sister, daughter, etc. So it's not actually being tracked in terms of female or male account. So moving forwards and looking ahead. So if you could go to the next slide, please. So looking ahead, we see two core focus areas in bridging this gap. The first being reducing the gender gap in mobile ownership, and second being increasing the affordability of mobile handsets. So if we look at the first point on the next slide, so this is reducing the gender gap in mobile ownership. So before I crack on, actually, the stats shared on this slide have been taken from the Mobile Gender Gap report for the most recent year. And so yeah, just wanted to say a quick thanks to our sister team, Connected Women, for sharing their insights with us. So if we look at the right-hand side chart here, while it's clear that South Asia has been the region that's kind of reduced the gender gap in mobile ownership the most, they're still the region with the largest gender gap as well. So the mobile ownership rate for women in South Asia stands at 67%, and still leaving 201 million women unconnected. This actually has a strong contrast with what's going on in East Asia and Pacific, as there's only a small 1% gender gap. But nevertheless, this still leaves 34 million women unconnected. So if we can move on to the second point, so increasing the affordability of mobile handsets on the next slide. And here we look at the smartphone ownership rates over time, so from 2019 to 2020, for both male and female. So what kind of sticks out here is India alone, as firstly, they have the highest smartphone ownership rates for both male and females. And what's more kind of interesting here is the significant uptake in smartphone ownership amongst females, increasing from 14% to a quarter of the female adult population in 2020. So several insights from the gender gap report has suggested more kind of COVID-19 related reasons that this uptake has increased. One being the fact that smartphone ownership obviously gives more access to video channels to learn new skills and kind of take those skills and kind of start up small businesses and get, additional household income, which was definitely what we saw when lockdowns kind of hit across the nation. Another reason was affordability. So, whilst new kind of innovators are creating cheaper smartphones, this has led more and more people to purchase. However, the cheapest smartphone in India is still 206% of the average monthly income. So still kind of remains unaffordable for majority of the kind of lower income customer segment we're looking at. So, whilst we've drawn a lot of focus to reducing the gender gap in mobile ownership, this kind of also induces more commercial opportunity. So obviously with higher kind of mobile and smartphone ownership, we're seeing more and more mobile money services shifting from kind of USSD mechanisms to using solely smartphone apps. So there is commercial opportunity here to acquire more customers in the female kind of customer segment. And in broader terms, this increasing the female proportion of customers also addresses several kind of sustainable development goals in kind of attaining gender equality, reducing inequalities as well, and in this kind of specific use case, addressing income opportunities as well. So overall, providing mobile money as a financial tool for women can unlock many benefits down the line. So yeah, that actually brings us to the end of our presentation. I think, before we move on to Q&A, just wanted to quickly touch on our new mobile money metrics website. So we launched this just after the launch of the State of the Industry report. But this is kind of a new and more interactive way of exploring all the data we use in SOTIA. So this covers everything from accounts, agents, transaction volume, values, and it's very kind of easy and user-friendly to filter for different regions. It's also historical data, so you can explore these metrics from years spanning from 2011 to 2020. So yeah, urge you guys to check out the website here.
Yeah, Great. No, definitely. We're very happy about our new portal. Thanks, Kavita. Amazing. I hope you can hear me now. I had some audio issues there earlier.
Yeah, perfect.
Yeah. Great. Okay, I guess we can move into the Q&A. There was a few things I wanted to touch on as well when it comes to sort of what's happening in the region as a whole. And I think for I guess obviously as yeah, most of you probably saw in the early slides, what we're not including sort of developed Asia, so China and India into this, because what we're focusing is obviously on services that are available to the unbanked. Having said that, I think what's really interesting about Asia as a whole is the type of investment that's spanned from especially Asia. We see Ant Financial being very active and investing in services across Indonesia, obviously investing in Paytm in India, which also has the payments bank. I think there's Asia is a very interesting space in mobile money at the moment, and as Kavita mentioned, when it comes to sort of the merchant payments for a lot of mobile money providers has been one of the holy grails, and it's clear that this is really moving forward in Asia and especially in Southeast Asia. So it will be interesting to see kind of what ripple effect or knock-on effect we'll see if there will be lessons learned in South Asia from Southeast Asia, and then maybe by East Africa from South Asia at some point as well, to kind of put Asia in a bit of a global context. We had a question on, well, first one on international remittances, just on the formal channels. What do they actually entail? What does that mean? Is there something
Right,
you
yeah.
can Kavita?
Yeah, so when we refer to formal channels, this essentially refers to the international money transfer companies. So, for example, World Remit, MoneyGram, Ria Money, along those lines. So, this kind of the process of sending remittance abroad using these international money transfer companies is mainly through kind of cash. So once on the receiving end, so if you were to receive an international remittance payment, it would basically entail going to a World Remit store, for example, and picking up that remittance in either a voucher and cashing that out, or simply just getting it in cash. So I think that's kind of the main differences we're referring to when talking about formal channels versus mobile money. Yes, I'm not sure if there's anything to add there.
Well, yeah, and I guess some bank transfers in there as well, given the scale. But I think something, I guess, yeah, I won't refer to this article again, but in general, everything that's going on within international remittances, mobile money is in such a competitive position, which means that it's really helping the recipients, and I think a lot of the Nomad reports as well, and I urge people to kind of dig into those if they want to know more about exactly how international remittances work, especially the different channels and how mobile money relates to the formal ones. We had a question on just COVID responses as well, and if it would be useful to continue these responses beyond COVID-19. I can take.
I think maybe because you're kind of referring to like commercial sustainability. So if you wanted to kind of continue from there.
Yeah, I guess the question is a bit too broad, unfortunately. I mean, from an industry perspective, and hopefully also from an end user perspective, the raising of balance and transaction limits is hugely helpful. It means that the industry can move forward. It means that, for example, if you are in a small company, you want to pay out salaries to a couple of your employees. Having increased transaction and balance limits means that you can behave in different ways and can rely on mobile money maybe for longer through the growth of your company. But on the flip side of that, I mean, we have if you would extend fee waivers for too long of a period, it would have detrimental impact on the sustainability of the industry. And obviously, without the industry making profit, we would most probably see financial inclusion shrink drastically. Because mobile money, because of the agent network that mobile money commands. I mean, in many countries, we're talking about hundreds of thousands of transaction points where you can cash in and cash out money. So by undermining any profitability for mobile money providers, you would jeopardize sustainability and then have possibly a very significant impact on people's access to financial services, essentially. So transaction limits and balance limits, absolutely extending that would be great. And a lot of providers have been pushing their regulators for years actually to come around and raise these limits, but it's not something that was done until COVID happened. Well, I guess we can hope that there's a bit of a silver lining there as a catalyst, a digital catalyst. Oh yeah, you shared the link there. Yeah, exactly. So I guess looking at exactly how the different policy responses, how they impacted different players, regulators, end users, and so on, it's really important to answer that question. So I guess unsatisfactorily, it's the answer is it's different in different cases, case by case. Horses. We only have a couple of minutes left. Kavita, was there anything you wanted to mention? Let me have a look here at the other.
Yeah, I'm just looking at some of the questions. Got one here saying, could you expand on some of the mobile money policy responses to COVID-19? So, yeah, I mean, there was quite a few examples we had in the region. So I guess it's always good to have the real life examples. So yeah, I mentioned increase of transaction limits in Bangladesh earlier in the presentation. But in Pakistan, for example, so when it came to promoting digital and electronic payments, what kind of happened in Pakistan was the central bank kind of advocated for banks nationwide to promote the use of digital channels through social media, print media, and again electronic media. So, and this also kind of applies to what mobile money services were doing as well. Again, in India, Airtel Payments Bank waived off charges on cash withdrawals for all kind of the mobile money account holders because of the lockdown. I guess, I mean, obviously with cash withdrawals, it's a bit of a different story here, but they still kind of helped. I mean, I guess some players kind of incentivized to use more digital payments, but I mean, different customer segments means kind of different policy response. So that's kind of what we saw happening in India.
Great. Okay, I think we're actually at time.
Yeah.
Rita, and thank you so much. Thank you everyone for listening. If you have any questions, we will happily answer them via Twitter or via LinkedIn or any other way you can reach us. Email as well if that's your preferred medium. Yes, again, thank you for joining us, and hopefully we'll see you soon for other regional cuts. Thank you so much.
Thanks everyone.